Hello, good morning.
Good morning, everyone.
Good morning, everyone. Good morning to all the panelists. We're going to give a few minutes to let more participants join. We'll start very soon.
Okay.
Good morning, Mr. Abiodun.
Good morning, ladies and gentlemen.
Good morning, and once again, I thank every one of you for joining. I will be giving a few minutes to let other participants join, and we should commence the webinar by 11:05 a.m.
Okay.
Okay, good morning, everyone, once again, and welcome to this webinar on the growing role of exchange-traded funds in wealth management and investment strategies. My name is Ikubuzo Gucci, and I'm a member of the asset management team in Vetiva, and I will be moderating this session. We are glad to have every single one of you on this call, on this webinar, and we hope that we would have an enlightening and engaging session. And by the end of the webinar, we will be able to have key takeaways and knowledge of the ETFs. Please be reminded that this webinar is hosted by Vetiva in collaboration with Newdevco Investments and Securities Company Limited and the NGX. And during the course of the presentations and the sessions, if you have any comments or questions, feel free to use the chat box. And you can also make use of emojis to just show that the interaction is ongoing. So right about now, we are going to be bringing up the Managing Director of Vetiva Fund Managers Limited, Mrs. Oyelade Eive, to give us her introductory comments of the webinar. Over to you, Oye. Thank you very much for joining us today.
Thank you, Ugochi, and good morning, everyone. I'll just start by saying good morning, ladies and gentlemen, and distinguished panelists. Good morning, Mr. Ayodele. It's with great pleasure that I extend a warm welcome to you all for today's webinar titled The Growing Role of Exchange-Traded Funds in Wealth Management and Investment Strategies. In recent years, exchange-traded funds have fundamentally transformed investment approaches worldwide, effectively managing trillions of dollars in assets. As of August 2024, the landscape featured over 12,000 ETFs, collectively holding an AUM that exceeds 14 trillion. Notably, equity ETFs actually represent more than half of this figure, and these grant investors valuable exposure to both the developed and emerging markets. Now, turning our focus to Nigeria, we observe that the ETF market is still in its early development stage. However, it demonstrates tremendous potential for growth. According to the Securities and Exchange Commission, there has been a consistent upward trajectory in the net asset values of ETFs, indicative of an increased interest from investors. By the end of September, NAVs of ETFs in Nigeria reached 12.7 billion, reflecting growing enthusiasm. Given the scaling global adoption and utilization of ETFs, it's crucial to enhance investor awareness concerning their benefits. And today, we at Vetiva are excited to collaborate with Newdevco to deepen our understanding of these financial instruments and their role in strengthening our capital market. I would also like to take a moment to commend the support of Nigerian Exchange Group, NGX, for their efforts in expanding and enriching our capital markets through the creation of essential structures and initiatives aimed at investor education. Throughout today's session, we will delve into how ETFs can not only enhance market liquidity, but also offer diversified investment options. More importantly, we will explore how they can contribute to our individual wealth accumulation and, by extension, to the overall growth of the Nigerian economy. Thank you for participating, and I look forward to an engaging and insightful discussion ahead. At this point, I'll pass it back to you, Ugochi. Thank you.
Thank you very much, Oye. Thank you. I mean, I'm sure we are all looking forward to gaining a lot from today's sessions because we have a lot of information to unpack. And right about now, I'll be bringing up Mr. Olurotimi Abiodun, Managing Director of Newdevco Securities Company Limited, to give his introductory remarks. Welcome, Mr. Olurotimi. Over to you.
Yes, good morning, ladies and gentlemen. Yeah, Mr. Ayodele Olurotimi Abiodun, the MD of Newdevco Investment and Securities Company Limited. With me also in this meeting is Alhaji Jibril Mohammed Bello, the head operations Newdevco, and also, as we have heard, the representative of Vetiva and representative of Nigeria's exchange group. Then today we are going to discuss the growing role of exchange-traded funds in wealth management investment strategies. And the discussion will be in two parts. The first part will be presented by Vetiva and NGX. Vetiva will present considering ETFs as building block for wealth management, while the Nigerian Exchange Group will present the rising significance of ETF as an investment tool for investors. That is ETF global trend. Then the part two will include the question, and answers with experts from Vetiva, Newdevco, and I am optimistic that at the end of the discussion, we will all appreciate ETF as a significant tool for investors in wealth maximization. We all can enter into beneficial business relationship in this regard. As a result, I will also call upon the representative of Vetiva to commence their presentation, the presentation of their paper in this regard.
Thank you very much, sir. Thank you very much. We are very glad to have you on the call, and also Mr. Jibril. And we would now be proceeding to the next item on our agenda, which is the first major session of our webinar today. And we expect that this session should educate us on the dynamics of the ETFs and how it works. And, you know, would be making sure that our notepads are going to be filled with lots of information. So to take us on this presentation, I'll be handing over to Ms. Ifedayo Oluwoporoko, the head of investments in Vetiva Fund Managers Limited. Over to you, Ife. Thank you very much for joining.
Thank you very much, Ugochi, and good morning to everyone on the call. Thank you to the participants for joining. Welcome to panelists as well on this call. My name is Ifedayo Oluwoporoko, as Ugochi mentioned. I work with the Vetiva Fund Managers Limited team. And on this particular session, we're going to be speaking on just using and maximizing the usage of exchange traded funds in your portfolio allocation, and also in making your investment decisions. And I'm sure that we've been hearing about ETFs quite a lot, whether from the NGX end or from Vetiva's end. But part of the purpose of this session is to ensure that we're able to carry everyone along with us and to ensure that we deepen the understanding of the markets on ETFs. So to start this session, we're going to start off with a very quick ETF awareness poll. We just want to know how familiar you are with exchange traded funds. So I believe up on our screens should be a poll. I don't know if anyone can confirm that they can see the poll. And the goal is for everyone in this session to please participate in the poll, and we will take a look at the votes for the poll immediately before I jump into our presentation, which is going to last about 20 minutes, very short. So please, let's just attempt the poll. We're going to leave it open for just about a minute or so. So right now it's 11:17, so maybe just a minute or two. Thank you. I can also run through the questions with us. First question being, how familiar are you with exchange traded funds? And we have three options there. The second option being, the second question rather being, ETFs give you access to different securities by investing in a single stock. Is that true or false? The third, you can invest in an ETF using any SEC licensed stockbroker. Is that true or false? And the final poll question being, which of these ETFs gives you a close representation of the market? Vetiva Group 30 ETF, Vetiva Industrial Goods ETF, or Vetiva S&P ETF? I mean, I believe that's enough time. It's a very short poll. Is there consensus that we close the poll now? Are we waiting for anyone? Okay, so I think at this particular point, we can begin to close the poll whilst I share my screen for the presentation. Okay, so I think we can go through the response to the poll. Let me just, Ugochi, I don't know if you can possibly have access to the results of the poll from your end. Okay, it's come up now. It's come up now. Are we all able to see the results of the poll? Or is that just me? I think everyone should be able to see the results of the poll. But in the first question, you see that we have about 30% of people on this session that are not familiar with exchange traded funds. And that's fine, because I think the aim of the session is to ensure that we leave here familiarized. We have knowledge of what ETFs are. We see how we can make use of them in making our investment decisions. And, we can go forth into the world and invest in ETFs, hopefully. The second question, ETFs give you access to different securities by investing in a single stock. That is true. So the 18% that have marked false now know that that is what ETFs do. They give you access to different securities by investing in a single stock, and we will delve into that and unpack what exactly that means. The third question is unanimous. We have consensus 100% that we can invest in ETFs using a SEC licensed stockbroker, and that is correct, as we will learn ETFs trade just like any other stock in the market. So that is correct. And the final question, I think this is very split, just like the first question. Which of these exchange traded funds give us a close representation of the market? The correct answer, drum rolls, is obviously the Vetiva Griffin 30 exchange traded fund. I said obviously, but I think again, once we get into the session, we will become a bit more familiar with all these exchange traded funds, and we will see how exactly the Vetiva Griffin 30 exchange traded fund gives us a close representation of the market and what that means. So I would say that this was a relatively successful poll, even though I see that on average it was about 23 people that participated in general, even though we're way more than that here. But I believe that as we go through the presentations, the participation will increase. So thank you for participating. And I'll just delve straight into the presentation now. Ugochi, please can you confirm you can see my screen? I think I have less than 20 minutes now,
Yes,
so I'll just try to be efficient. Okay, thank you.
Yeah, screen is off.
Okay. So for this session, we're basically going to divide it into 3 sections. The first is a very quick overview of the exchange traded funds scene in the Nigerian space, or just an overview of exchange traded funds. I will not speak too much on this because I know that the NGX is on the call and their presentation does good justice to this.
If
Yeah.
Can you switch to presentation mode so you can see your whole screen?
Okay, apologies for this.
Thank you.
Okay, does this work better?
Yes, it's better.
Okay, so I'll proceed from here. So in first section, a brief overview of exchange traded funds. Then second section is the use of ETFs in portfolio allocation and investment decision making. And the third section will speak on investor access and exactly how we can trade these exchange traded funds. So just as an introduction, what are exchange traded funds exactly? And like I mentioned, I'll be very brief on this session because I know the NGX is also coming up to introduce us to ETFs as well. But in general, I think how you should think about exchange traded funds first is that they're securities. They're securities that are listed. They trade like securities, but they're actually open-ended funds. So exchange traded funds are open-ended funds that are listed and trade on exchanges like stocks. One of my colleagues likes to describe exchange traded funds as a basket of, she'll say small chops, or a cocktail with many different things. So how you should think about exchange traded funds is it's a singular security that gives you access to the performance of a basket of other assets or securities. So by participating or trading or buying an exchange traded fund, you are actually gaining access to the performance of a whole other set of securities that are embedded within that particular exchange traded fund. So you can, as we mentioned, you can think about this just like a fund. What does a fund do? A fund gathers capital and it invests in an array of securities, and that's what the exchange traded fund does. So it basically replicates the performance of a particular, whether underlying index or a basket of securities or commodities. The reason why an index is used, of course, is because when you think about what an index is, an index typically would consist of certain securities that meet whatever criteria it is trying to represent. So for an exchange traded fund, that product can buy into or replicate, let me say, an index so that it gives an investor access to the underlying securities in that index essentially. So an easy way to think about it is that ETFs combine the characteristics of a mutual fund and stocks. I said I wasn't going to stay too long here, so I'll just move forward. And part of the reasons why this session is also important is because what we've seen is a trend where ETFs have become extremely and exceedingly important, and we have seen strong growth in exchange traded funds. Globally, there are thousands and thousands of exchange traded funds, and the growth rate of exchange traded funds in recent years has also been very strong, and we'll speak to some of those reasons. You're seeing 30 to 40% growth in exchange traded funds, and they're also representing a much larger part of the mutual funds market in general. So where before exchange traded funds globally would represent, let's say 10 to 15%, now they're beginning to represent 30% to 40% across different markets. For the Nigerian markets, the exchange traded funds section, let me say, is still nascent and is growing. But that's part of the reasons why we're here, to see the benefits and how more investors can obviously participate in this opportunity. In terms of the exchange traded funds in Nigeria, we have 12 exchange traded funds, and you see Vetiva ETFs listed from 1 to 5, and then other exchange traded funds as well. I won't delve too much into this, but you see that in general, the market is growing. This data is as at 18th of October, but you see that the AUM is consistently growing, and you see also the style of exchange traded funds that are in the market. On the top of the list and the largest exchange traded fund currently is the Vetiva Griffin 30 exchange traded fund, and we will speak more to what exactly this broad market ETF is. So here, this just shows the suite of ETFs that Vetiva currently manages and has. We have the VG30 ETF, which is Vetiva Griffin 30 ETF. It's the market representative ETF. And what this ETF really is designed to do is to track the performance of the constituent companies in the NGX 30 index. So I'm sure we're familiar with the NGX 30 index. The NGX 30 index comprises of the top 30 companies listed on the Nigerian Stock Exchange in terms of market capitalization and liquidity. And what this ETF does really is to track the performance of the NGX 30. So where you have the NGX 30 performing or returning 30+% so far this year, you would also see that the Vetiva Griffin 30 exchange traded fund is replicating that particular performance. So what this does is it's pretty much like buying the market in one security, essentially. And that's the same thing you have replicated for the sector-based ETFs as well. So where the VG30 ETF gives you access to the broad market, the sector-based ETF gives you access to certain sectors. So Vetiva Banking ETF, if you want a specialized exposure to the banking sector, the Vetiva Banking ETF gives you access to that as it tracks the banking index. Same with the Vetiva Consumer Goods ETF, Industrial Goods ETF, and Vetiva also has the only fixed income exchange traded fund currently in the market as well. The Vetiva S&P Nigerian Sovereign Bond ETF. So in this second section, we're going to speak to the use of ETFs in portfolio allocation and investment decision making. And I think this suits both institutional, let's say, portfolio managers and also retail investors as well, whether you're managing your own personal portfolio or you are in the capacity of being a portfolio manager, managing corporate portfolios as well. I think we're going to delve into how to use ETFs and why fund managers across the world are increasingly using ETFs and retail investors as well. And I think one of the first points or the starting points for the use of ETFs is when you think about it for your portfolio strategy. This particular strategy, I believe, works for both institutional and retail investors. Maybe institutional investors or portfolio managers using more, but I think every investor can definitely strategize or use this as a portfolio strategy as they please. So this is basically, and I'm sure some are familiar with it, the core and satellites or core satellite approach to portfolio management or portfolio allocation. And in this particular case, how portfolio managers or you as an investor would think about managing your portfolio is thinking about having a core portfolio and then having satellite portfolios. So the point of the core portfolio, and I think there have been recent studies, not really recent, but studies on this, that when you look at how the long-term performance of portfolios, you would see that the major driver of the performance of your portfolio really is not in stock selection, but it is mostly, let's say, asset allocation. What that basically means is that most of I think it was about 90% of the performance of long-term portfolios is really driven by what assets you allocate your resources to, as opposed to whether you pick this stock or you pick that stock or you pick that stock. That particular portion of stock selection really represents about 7 to 10% of what your eventual long-term performance is. So you've seen a lot of portfolio managers make use of core and satellite approach. In terms of the core portfolio, what that basically means is constructing a foundation for your portfolio and determining, and we're practically in the next slide, and determining maybe 60 to 80% of the funds you want to allocate to your portfolio, you put that in a core portfolio. This core portfolio, I think it's called core because it's the foundation, it's meant to be stable. You invest in whether you break that 60 to 80% into passive investment of tracking the market, so that at the very most or at the very least, you have a portfolio that has a core that tracks the markets. And the reason why ETFs are important for this is because ETFs are good for benchmark tracking. For whether investors or portfolio managers, how do you measure the performance of your portfolios? How do you know you're doing well or not doing well? The first thing is benchmark tracking. You first track the benchmark, and then whatever you want to do after that, you can do. So this core portfolio just ensures that at the very least, you are tracking the market, whatever market you want to be exposed to. And I think that's part of the good things about ETFs, because it gives you, for example, the Vetiva Griffin 30 ETF gives you exposure to the Nigerian stock exchange, basically, because the NGX 30 index that this ETF tracks covers about 90% of the market. So you know that you're not deviating in that particular sense. So this is the core strategy, and this is where I would say your passive investments would lie, and you can hold that for just tracking the traditional benchmark essentially. And typically this core portfolio is not traded too often. It's just to ensure that you have that stability so that wherever the market goes, you are, sort of leveled. And then you now have your satellite portfolios, the core making up 60 to 80. So your satellites would make up between 20 to 40% thereabouts, depending on your strategy. So your satellite portfolio is where you really actively manage your portfolio. And in other times, in our current market, what we have is passive ETFs. Passive ETFs being ETFs that just track in the indexes. If you want to track the Nigerian market, you use VG30. You want to track banking sector, you use Vetiva Banking ETF. But for the satellite portfolio, you can then decide to include actively traded ETFs, which we do not necessarily have. But in our particular case, you can use the satellite ETF for example, if you want sectoral exposure. So that means I want additional exposure to the banking sector because maybe I've seen that the banking sector, or I have an outlook, for example, that the banking sector is going to outperform. So I use my satellite portfolio and I put extra investments in there to track, for example, the banking sector. There are different ways to manage these satellite portfolios, which would make up the other portion of your portfolio and actively manage that part. The goal of this can be to earn greater returns wherever you see investment opportunities, whether across sectors or across themes or even across other asset classes, because you have, for example, apart from equity exchange traded funds, in our case, we also have fixed income exchange traded funds as well. And then you can overweight specific securities or stocks or even countries as well. So I think that is a good way as a portfolio manager or as a retail investor to use the core satellite approach across board. So on this slide, you just kind of see the practical approach in terms of if, for example, I was an investor with a medium to high risk appetite, was looking to break down their equity exposure, and they think about it in this way. I have a core portfolio which is tracking the market. And, as I mentioned, that's a key part when you are looking at long-term performance of your portfolio. So you have the VG30, let's say you allocate 70% of your portfolio to that particular exchange traded fund, giving you access to the market almost fully and you allocate 70% to that if you want. And then for the satellite portfolio, you can decide to include the sector ETFs such as Vetiva Banking ETF, Vetiva Goods, Consumer Goods ETF, Vetiva Industrial Goods ETF, which you can allocate up to 15% to. If you'd like, you can also include a bond ETF, depending on your outlook for the bond market, include 10%. And then we also have the new gold ETF as well, if you would like, and you can include that 5%. Now, this is a sample allocation, and this can be varied as the investor likes, whether you want this section to go to 60 or increase that to 90, depending on how involved you are in the market as well. And we'll also see part of the reasons why ETFs are very useful for this particular type of approach. So in terms of speaking to some of the, sorry, I'm just trying to take a look at the time. Okay, so in terms of looking at some of the uses of exchange traded funds and why they're so growing in importance, and you are seeing that market grow so much, and why investors should make use of this product. The first thing is diversification, and at the core of portfolio management is diversification and ensuring that you are able to balance your risk and reward, I would say. And ETFs give you an opportunity to diversify in a very cost-effective manner. Now, this is how I'll explain it. ETFs give you exposure to different sectors or to different markets. So if you want to diversify, it's quite straightforward to use an ETF. If, for example, you want to increase your exposure to the banking sector, and you don't necessarily maybe want to there are many situations. You may not have full coverage of the markets to say that you don't necessarily cover or track or research all the banks. There are many banks in the market, and then you're wondering how to, create exposure as opposed to, let's say, stock selecting, or even if you stock select, just buffering your stock selection, you are able to exchange traded funds to diversify your holdings in the market. And this is obviously cost effective in such a way that, as opposed to picking 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 different stocks, you could easily just maybe use one exchange traded fund and buy into that exchange traded fund to express that investment objective in a cost-effective manner. In markets where maybe brokerage fees are per unit, for example, that can be very useful and makes it cost-effective for you. When you also think about the liquidity, flexibility, and scalability of exchange traded funds, it also makes it quite attractive. We can use, for example, I think the US market right now, I think yesterday they went through their elections, if they haven't already announced who their president is. So let's say, for example, you are a portfolio manager in that market, and you have views, you've made views and said, oh, if this particular candidate goes into office, I believe that, oh, these policies will be promoted, or if this particular candidate goes, these policies or this industry is likely to benefit from policies that come from this candidate. And you want to express that investment objective as soon as results are announced, type of thing. A flexible way to express that investment strategy would be to use an ETF, because it's quite fast. You can choose sector ETF, whatever sector you believe or industry you believe will benefit from that. You make use of that ETF, trade it, buy it, and you immediately have access to that sector instantly, because again, you have the liquidity of the exchange traded funds, given that they're traded on the stock exchange, in our case, on the Nigerian stock exchange. And that's different from other mutual funds. For other mutual funds that are not exchange traded, practically, you cannot really do intraday trading. Maybe end of day, you're able to buy into the market, into the funds or whatnot. But with exchange traded funds, you trade them exactly like any other security. And that also makes them scalable as well in many regards. We've also spoken about strategic asset allocation, which we mentioned. If you're trying to be strategic or tactical, even with your asset allocation, I think we discussed that with the core and satellite approach. You are able to make use of exchange traded funds for this. Importantly, access to global and niche markets. And I believe that as the Nigerian exchange traded fund market deepens, this will also come into play. But in, let's say, in foreign climes, for example, let's say, or even here, if you want to gain access to a global market, a very efficient manner to do that is with exchange traded funds, because it's an international market and you may not have full coverage of those markets. You may just want a broad exposure. I just want to invest in America. If you just want, or I just want to invest in an Asia market or in Japan or whatnot. If you want an easy access, or in an international investor's case, I just want to invest in Nigeria. If you just want access to a global market, an easy and convenient way would be to use exchange traded funds. You buy the Vetiva Griffin 30 ETF and instantly you have exposure to the underlying performance of the Nigerian market, and you've included that in your portfolio. It can also help in niche markets, because you have ETFs, and as we progress, I know that our ETF products will move from just 12 in the market currently to a lot more. So you have other niche exchange traded funds that could be for alternative investments. They could be for, right now we already have bonds, more commodities. So they also give you access to those markets as well. Exchange traded funds are also income generating. They, as I mentioned, this is like investing in a stock, because they also, the way stocks distribute their dividends, because the underlying securities are still stocks, they also pay dividends. So what then happens is that the exchange traded fund itself would also distribute, accumulate those dividends and distribute those dividends in periodic manners. So for example, our VG30 ETF on a biannual basis you see that there are distributions, and those distributions have been consistent since the fund has been launched. And I think this year we celebrated our 10-year anniversary for VG30, so a decade in use and growing. So you have distributions as well. So you are not just, obviously, investors have different uses for their investments. Some are looking for capital appreciation, some are looking for income as well. And you see that the exchange traded funds provide both in terms of distribution and also potential for capital appreciation as well. And in other markets, you also have ETFs that are thematic. So you can have a high dividend ETF or high growth ETF. So if, for example, you are an investor that is very interested in income, you would also look to high dividend ETFs as well. And that's where our market is going to. And then finally, in terms of ease of use, simplicity, and transparency, and this is a major reason why ETFs have grown globally recently and even in our markets too, because retail investors absolutely love ETFs globally, because it just means that you could the different spectrum of investors. You have investors that have full, any other occupation they do, and all they have is maybe a stockbroker or something, and they want to invest their funds, they want to play in the equity markets. They use ETFs a lot because it means that you don't necessarily need to know the details of each and every security or stock select. In that case, why should I just pick this particular stock or that particular stock when I can just use an ETF and I still get the exposure that I need? I hope I'm not running out of time. Simplicity, they're quite simple. You trade them like every other security. And transparency as well, because with ETFs, you are able to see the underlying securities based, like we're fund managers. So on a monthly basis, there are fund fact sheets that are released, where you can see the underlying securities of the exchange traded funds on a daily basis as well. I think if you go to our website on a daily basis, the price of the ETF is quoted, the net asset value of the ETF is quoted. So you have that transparency to see the underlying securities and the performance of the ETFs on a daily basis. So I think that really summarizes a good portion of how to think about ETFs when you are looking at your portfolio and you are making your investment decisions. And I would say this also embeds benefits as well. So in this next slide, really, we have spoken already about the benefits. Diversification, you can diversify easily with exchange traded funds to reduce risk, of course. Flexibility, you can implement a wide range of strategies with your ETFs, whether you want to buy and hold or you want to trade actively. I want to get into the banking sector now and exit later. You are able to use ETFs to express those investment objectives, or you can just buy and hold. Transparency, like I mentioned. In terms of fees as well, when you think about the fees for exchange traded funds, when you compare them to other mutual funds, especially because they're passively managed, you see that the lower fees is also an advantage. And then in terms of convenience and accessibility as well, you can buy your ETFs through any broker, any brokerage accounts, just like you buy any security, and with any budget as well, because really you can buy 1 unit of an ETF if you like, and you hold it. This slide basically spoke to, why ETFs grew in popularity. They're simple, they track the benchmark, and also financial inclusion. Anybody can use an ETF and get access to an ETF. In the final section here, I'm going to speak on investor access and trading, and this will be very straightforward, I believe. So the first thing is research. Obviously, irrespective of what I've said here, you do your own research as well. The NGX is also coming up to speak soon. So you do your research. Which ETFs do I want to buy? Why do I want to buy an ETF? And what are my investment objectives, and how do the ETFs play in? You open a brokerage account if you already do not have a brokerage account. And through any broker, really, you can buy ETFs because they are listed on the stock exchange. You can place your order. You can get guidance from whether your broker or by yourself, really. and you buy your ETF. You can, I think a good thing about ETFs as well is that, for example, we're fund managers. So you have fund managers as well that consistently provide information about the ETFs to investors. And finally, you monitor your investments as well. So really, it's this side just speaks to the same process, ETF trading. You can electronically buy your ETFs on the Nigerian Stock Exchange. ETFs trade like stocks, so they settle T+3. So you make use of your trade today, or you activate or do your trade today, and T+3 you have to settle the trade, and you make payments for the trade, and the securities themselves settle in your depository, in your CSCS account. So just exactly like stocks, no difference. Market liquidity as well, where we have authorized dealers for the exchange traded funds, and they post quotes on a daily basis. So brokers can always engage with the dealer to get those quotes to ensure that the market is balanced. And on this call, we have two brokers. We have Newdevco. We also have Vetiva dealing as well on the call. So really, you have all you need as well. And finally, creation and redemption. So you can deal with any of the brokers. You can deal with your broker. You can buy ETFs through. As long as you can buy stocks, you can buy ETFs basically. And then finally, creation and redemption. So where you have for example, we have institutional investors that use ETFs, and sometimes you want to create large volumes. If you want, the fund managers are always there to help you create those larger volumes if you like. Aside from buying and selling on the secondary markets, you can also create or redeem ETFs as well in kind. So I think this brings me to the end of this presentation. I don't know how I've performed with time, but I hope that we're still very much well in line with the time frame. And on this note, I will hand over to Ugochi, because I know that there'll be potentially questions. So thank you very much, everyone.
Thank you very much, Ife. Thank you. I thoroughly enjoyed that presentation. And I know that we all have like key takeaways, but mine is, I like the reference of the, small chops. Like, why can I have samosa when I can get the entire pack of small chops? So I'm sure we all know that ETFs give us access to the broader market. And another point I took down is, ETFs are very convenient. With any budget, you're good to go. You just have to open like your brokerage account, and it's very seamless to understand. So thank you very much for that presentation. It was very insightful. Right about now, we'll be going into our next presentation, but be reminded that if you have any questions or comments, you can always put it down in the chat box, and during our panelist session that will be coming up very soon, we can get answers to those questions. So to take us on our next presentation would be bringing up Mr. Abimbola Babalola, the head of trading and products at the Nigerian Exchange Group, and he will be taking us on the rising significance of the ETFs as an investment tool for investors. And we look forward to learning. I'm sure we all look forward to learning. My notepad is almost full, and I'm very excited to, gain more knowledge in this next session. So on that note, I hand the mic over to Mr. Babalola. Over to you.
Yes, thank you very much. Please, can you confirm if you can see my screen?
Yes, sir, we can see your screen, but you can just adjust presentation mode so that we can get the full glimpse of it.
So good morning all. I will be talking about the rising significance of ETFs as an investment tool for investors, and I'm looking at the global trend. So in order to speak about that, I'll try as much as possible just to explain, at times people say ETFs, ETPs, just bring a bit about difference there. Then, now go take a deeper dive into the global market as far as ETF is concerned, and what is it that the kind of yields or growth that we're seeing there. Then speak a bit about our own market and the experience that we had there. So today, when people talk about ETFs, some people talk about exchange traded products. You can look at that from two angles, especially when you're focusing on an exchange traded product. But fundamentally, there's something, there's a product, there's a basket, there's something that you're actually benchmarking, and that is what you are actually using to have an exposure into that particular instrument or class of asset. And whatever the return that you are getting on the underlying asset is what you are also getting indirectly in your own investment. So if we look at exchange traded products, we could look at it from the fact of whether you are looking at an ETF or you are looking at an exchange traded derivatives. But like I said, they track underlying securities, whether it is an index, whether you're talking about other financial instruments, and it could be a single stock, it could be an index, which is a basket, it could be a bond, it could be a commodity. But the advantage, like the previous speaker said, is that, yes, some of us might be used to mutual funds, but this time around, ETFs gives you that ability and the opportunity of actually combining the way the benefit of mutual funds and your ability to trade. Because in mutual funds, you have to wait until maybe around 4 before you can call the fund manager, before you can trade. But for an exchange traded fund, those instruments are listed in the market. They are traded, just like you trade your stocks, you do transaction intraday. And it also gives you the opportunity that the price of that instrument, because of the trading ability that it has, the market can go up or go down based on the limit up or limit down that have been stated for that particular instrument. If it is an instrument that is equity based, because in our market, equity can go up 10% or come down 10%. So for equity based ETFs, they equally have the limit up of 10% and limit down, meaning you can actively participate. You are not depending on a fund manager to buy you out. You are actually depending on the forces of demand and supply to price that particular instrument. So in terms of futures, like I said, they are listed on an exchange. So you can see the price, and you can see the price intraday, and you can see activities as they are going, volume and value that is being traded online, real time. And the unique thing about this is this, and let me quickly explain the structure. So take for instance now, if you want to track NGX 30, what fund managers mostly do is that a fund manager will come and say, oh, investing public or investors, I want to raise 5 billion naira. And if I raise this 5 billion naira, I'm going to invest it in securities that are contained in that index. So meaning the fund manager or asset managers will pull funds and they will invest this fund in stocks that are in NGX 30, such that if you participate or you acquire some of these ETFs, as the value of NGX 30 is growing, so is your investment growing. So, and you can see the uniqueness of this, or the advantage of this is that, if you're to talk about the aggregation of all the companies, the market capitalization of NGX 30 today is about 50-something trillion, or let's say 50-something trillion. And with your 5,000, 10,000, you can also have an exposure to that huge basket of security, you understand, with your 10,000, with your 5,000. But if you were to buy stocks directly, by the time you are putting 5,000 into a stock like Dangote, probably you'll be able to get 2 or 3 units, you understand? But that is totally different. And like I said, it gives you that exposure. So you don't have to say, oh, because I'm a retail investor, there are some classes of instrument or assets that are big that I cannot participate in. And it's simple. If I say today, with your 5,000, with your 10,000, we're saying that the all-share index of the Nigerian Stock Exchange has gone up by 30-something%. It means that if you are invested your 10,000, your 20,000, your 5,000 in an ETF that tracks NGX 30, you will also have gained about 30-something% in terms of return. So again, it is done in, like I said, easy access. It trades like stocks. It benefits everything like stocks, except that, in there, you are indirectly investing in the company as opposed to you directly investing in that company. And this just wants us, this slide is just speaking to the fact that ETF is not something that is new. ETFs is growing, and in the most geographic area of the world, because ETFs is growing. You can see in the North America, you understand, on the New York Stock Exchange, over 3,000 ETFs are listed. You understand? On this is Toronto, you have about 1,264 ETFs listed. On NASDAQ, about 669, and on CPOE, they have about 740 ETFs listed. If you look at Africa, Johannesburg has the highest in Africa. That is 109 ETFs. In Nigeria, we have 12, and we are still growing, and we'll grow more. And we have other African countries. If you look at Europe, you have London Stock Exchange having about 3,554 ETFs. Deutsche Börse has 2,000, and 6 Swiss have over 1,000 ETFs. If you go to the Asian side, Korea had about 893 ETFs, Japan 6, and if you come to the Australia side, Australia has about 264 ETFs, and
Sorry,
New Zealand. New Zealand had about 40. So this is just to tell you that all over the world, ETFs as an asset class is increasing, and it's growing, and many people are introducing, and we will also introduce more ETFs so as you can use that instrument to have an exposure without necessarily you committing huge amount of money into that. Now, I've spoken about number of units. This also just speaks to the market capitalization of some of these things. If you look at the total, if you look at the North America, in terms of ETFs in NASDAQ is about $1.75 trillion, while that of Toronto is about $356.16 billion. Johannesburg ETF market capitalization is about 11.64 billion, while that of the Nigerian Exchange Limited is about 19.74 billion. So that is telling you that this asset class is growing, and in all, it will continue to grow. And I think the last time I checked, the total market capitalization of ETFs listed all over the world is over $13 trillion. So Japan, that is their own, and that just speaks to this. Now, again, in these slides, I tried to explain and show us the various kinds of return that you can see globally and the one that you can see in Nigeria. So if you talk about, the S&P 500, an ETF, the Vanguard ETFs that is based on S&P 500, year to date, it has returned 19.92%. You understand? The MSCI ETFs, about 15.01,
Sorry, Mr. Your slides are not moving. I don't know if it's just me.
They're not moving?
No.
Oh, sorry. Let me share again. Sorry, a minute. Are they moving now? Hello?
It's still on the first page.
Sorry, a minute.
Okay, sir.
We're moving now.
Yes, sir.
So I think I'm on this slide.
Correct. We can see your slide.
Year-to-date return and growth. So we're saying, I mean, if you look at various ETFs, you'll discover that majority of them have positive return, except for this Brazilian ETF. And if you come to Nigeria and look at the various ETFs that are listed, you know, the new gold, which is an ETF that is based on a commodity called gold, they understand. If you look at year to date, it has returned about 89.86%, which is even higher than what the equities have done. Vetiva ETF 30 had returned 59.22%. So what we're saying in essence is that, you know, yes, why you want to buy shares, and buying shares has other advantages. ETFs gives you an exposure, and if it is return that is of your concern, you can see the various ETFs that are listed in our market and the various kinds of return that they have given, which you can even say they are more than the inflation rate, you understand? And they are even outperforming the market, you understand? So again, it speaks to the fact that, you know, you stand to gain a lot if you decide to invest in ETFs. And, you know, this slide is just speaking to the fact that, you know, we have 12 listed ETFs as at October 2024, you understand? Although we've not had anyone listed, it also shows the growth that we've recorded in our market, you understand? Meaning we will have more ETFs that will be listed in our market. And we try here to try as much as possible to explain to you the asset classes that are the underlying asset against the various instruments that are listed. If you look at Lotus Halal ETF, you know, they are based on Sharia compliant ETFs. New Gold is based on commodities, while most of them are based on commodities except the Vetiva S&P Nigerian Sovereign Bond ETF, which is based on fixed income. So again, some of these instruments can make, you know, fixed income in itself, if you look at it, most times, you know, the ones that are active and are liquid are mostly on the run fixed income, the recently issued instrument. With ETF, I can gain liquidity, you know, gain liquidity for fixed income, gain exposure, and also use that opportunity to create leverage. You know, these are the advantages of ETFs. Now, some of us might be concerned to say, this ETF thing, unlike I'm investing in a particular company, I know the company management, I know the characteristics. So in addition to what the previous speaker had mentioned, as in terms of characteristics and features of an ETF, some of the things we've done on a regulatory point of view as a market is that we have a regulatory oversight over ETFs. It's not as if somebody will just tell you, I have an hypothetical basket that nobody have access to. You know, these instruments are being regulated by Securities and Exchange Commission. And if those ETFs will be listed, because they are expected to be listed, this is an exchange list, I mean, traded funds, they must be listed. Also, they must meet the Nigerian exchange requirement as far as listings of an ETF is concerned. One of the things we also try as much as possible as part of the rules when it comes to ETF is that whoever wants to set up and manage, any fund manager that says, I want to issue an ETF and expose it to the public, we will have them to set up a custodianship relationship, you understand? So that the asset, the underlying asset, they will buy those assets, they will also keep them under custody. So that it's not that why people think there's an underlying asset sitting down somewhere, you know, the basket itself is empty. We'll ensure that regularly, you know, these assets are there. We have access to it. If it is something that is kept in CSCS, you know, we know the account where those instruments sit, and we constantly do evaluation. And we, even part of our rule is that the fund manager or the asset manager must regularly show the net asset value of that particular instrument. Against, we build a structure, a trust structure around it. So there must also be a trustee who will ensure that the fund manager is abiding by the stipulated rules and regulation as far as, you know, what they have promised they will do for investors. And, again, one of the greatest advantage of this ETF is that it gives you diversification. Instead of you having to go through the pain of picking securities, you just look at the performance of that underlying asset, which can either be NGX 30 and other asset classes. And based on that, you take your decision. Again, somebody might also be wondering, and I think the previous speaker mentioned some, but let me quickly also say this. What are the benefits of this ETF? Is that one, you can easily trade them. If you buy 10, you can sell part, you can sell everything, you can increase your position because this thing is easily tradable, is listed. You're not looking for, it doesn't trade by appointment. You're not calling a fund manager who is telling you is not available. You can sell. And I think the last speaker also mentioned something. One of the benefits of ETF is also this ability to create an ability to redeem. So I can, once I know the basket that constitutes a unit of an ETF, I can actually approach the asset manager and exchange that ETF for the underlying asset. But I think the first thing is that this instrument is tradable, and and the forces of demand and supply actually determine the price and the value of the ETFs, and it is also transparent, and it comes at a minimal cost, something similar to what you pay for equities, but you have exposure to a greater and well-diversified portfolio. So diversification, transparency, you have all the trade alerts, all the same benefit, all the same settlement cycle is available for whoever invests in this particular instrument. So the next slide speaks to, what are those things that you understand? Like I said, this is, we know, like I did mention to you, more and more instruments are coming. And because of technology, because of the collaboration that is happening, we are like New Gold. New Gold ETF was something that was designed in South Africa. And today, that same product is available for trading in Nigeria. So we're doing a lot of collaboration, working with many other regulator partners to bring in more products so that Nigerians can have exposure, you understand, to some of these things with minimal cost. And also it makes it a lot easier for you to be able to do that. So again, there are regulations that we've put in place. We're working with leveraging on our collaboration with other developed exchanges of the world so that we can bring more ETFs into the market so that people can have the required exposure to whatever it is that they want to have exposure to and also benefit from that. I think, thank you very much for listening. Let me stop there. I'm ready to take questions. Thank you.
Thank you very much, Mr. Abimbola. I mean, that was a very, very insightful session. I'm sure we've all learned one or two from his presentation. And I mean, one of my takeaways is that, I mean, ETF is a safe investment because it's highly regulated. So, I mean, there's proper regulatory oversight in that sector. So, thank you once again, sir. And our questions will be taken in the panel session, which is coming up very soon. But before then, we'd like to know how you heard about this webinar. So a poll will be shared shortly. It's be coming up so that you would just click on the option that is referring to how you heard of the webinar today. The poll can go up now, please. So the poll is up now, so we can participate in it. I see 42 out of the participants have answered the poll. I mean, we have more people on the call, so would appreciate if we can all engage in the poll. Okay, I think we are good now. Thank you very much. I'll be sharing the results so that we can see where most participants' referrals came from. So we see 5% are from LinkedIn, 2% from Twitter, 2% from Facebook, 33% from Newdevco, and 58% from Vetiva. I mean, that's impressive. Thank you all for participating in this poll. So next up, we'll be going into one of my favorite sessions in every webinar, which is the panel session. I mean, we all have questions or comments, and this session aims to take care of every single question or comment that you have. So to facilitate this panel session, I will be bringing up Ms. Jesu Shetutu Ajagun, a member of the portfolio management team in Vetiva. I'm sure we're going to have a lot of takeaways, and there's a lot to learn also from this session. So on this note, I would call on Jesu Shetutu. Welcome, Jesu Shetutu. Over to you.
All right, thank you very much, Ugochi. Please confirm you can hear me.
Yes, loud and clear.
All right, thank you very much. Thank you, Ifedayo. Thank you, Mr. Bimbola, for such an insightful presentation. I mean, I got value, and I'm very sure that the participant as well got value. So for the sake of reintroduction, and just to be sure that we're able to answer the questions we already have from the presentations, I think I'll just reintroduce the panelists that would be answering the questions for us for today. So we have Mr. Abimbola Babalola, the head of products and markets at NGX. So I know he's already on board, so he's one of our panelists. The second panelist would be Mr. Jibril Mohammed, the head of operations at Newdevco. And the final panelist would be Ms. Ifedayo Oluwoporoku, the head of investment at Vetiva. So I think we'll just dive right into it for the sake of time. I know some of the questions we have here, some of them have been answered, but I think some people joined late. So we will just maybe take those questions again. So the first question would be to Ms. Ifedayo Oluwoporoku. Ifedayo, please can you confirm that you can hear me?
Yes, I can. Good.
All right, yes.
Afternoon.
All right, good afternoon. Thank you. So the first question I have for you here is, how does an exchange traded fund investment differ from other investment vehicles like mutual funds? I know Mr. Bimbola had sort of thrown a little light on it during his presentation when he was comparing ETF versus mutual fund. So I'd like you to just throw some more light on that, and also throw more light on, are exchange traded funds really risky, or are they risky at all? So that's the first question for you, Faye.
Okay, thank you very much, Jay. So for this first question, which is how exchange traded funds differ from mutual funds, I think we did discuss that, and Mr. Babalola mentioned as well. I think the essential difference really is the fact that exchange traded funds are exchange traded. So you can buy and sell them on the exchange. Other mutual funds do not behave in that manner because they're not traded on the exchange. You would have to maybe engage the fund, buy at some points during the day, whereas for exchange traded funds, they're traded on the exchange like every other security. So you have intraday trading for ETFs. I think there are other differences as well in terms of liquidity as well. Exchange traded funds being traded makes them very liquid and very easily tradable, and that exchange can easily be done between different market participants. In terms of I would say maybe fees, when you look at the management fees for exchange traded funds and mutual funds, because especially the ETFs we have in Nigeria are passively managed, so you see that the expense ratios may be lower, or the management fees may be lower, for example. So for most actively managed, or for most mutual funds, you see that management fees would be between 1% to 2% thereabouts. For exchange traded funds, that range starts from 0.2%, at least for Vetiva, for example, as low as 0.2%. So you have that advantage in terms of costs as well for investors. In terms of maybe minimum investments, for example, mutual funds may have different entry minimum investment requirements. Some may be 5,000 naira if it's a money market fund. It could be much higher if it's a fixed income fund. If it's a USD fund, it could be higher. But for exchange traded funds, for example, it's per unit. So whatever the singular unit of the exchange traded fund is, you can buy into that ETF. So they could easily be more accessible to that extent. In terms of transparency as well, as I mentioned during my presentation, for us at Vetiva, for example, we on a day, you know the underlying securities in the ETFs at every point in time, especially because they're tracking an index, and these indices are publicly available. So you see that, okay, in the Vetiva Griffin 30 ETF, you know the securities there, whereas for mutual funds, I think maybe a mutual fund can decide whether they want to release their securities on a quarterly basis or half yearly or ever even really. So I think those are major differences between mutual funds and exchange traded funds. And I think the second question is how risky ETFs are, right? I would say that ETFs really, sorry, I'll try to be faster. ETFs carry the risk of whatever underlying security that they're holding. So if it's an equity ETF, it will definitely carry the risk just like any other equity, whether it's market risk. So, I would just say that ETFs, they behave and replicate their underlying securities, and they carry that pretty much that exact type of risk as well. Thank you.
All right, thank you. I think that was detailed. So for the interest of time, I think we'll just answer every question within 1 minute, 1 to 2 minutes, so that we were able to answer as many questions as possible. But thank you very much, Ife. So the next question I have here is for Mr. Jibril Mohammed. So can you just speak briefly to what your outlook for the capital markets for the rest of the year is, and maybe into 2025, and how does investing in exchange traded fund actually fit into your outlook for the year?
Good afternoon. Good afternoon, everyone.
Okay.
Can you hear me? Okay,
Yes, I can.
Just 1 minute may be too short. I'll try as much as possible to be brief. I hope that will help. But because you can talk about the market outlook without looking back into, to where we're coming from. We're coming from a situation where we had, inflation rate that was driven by food inflation. The inflation rate as at June 2025, where we have about 25%, and today we have an inflation rate of over 34%. So really, we cannot separate the market from what is happening in the global economy. The market itself is an indicator, is the real indicator of what is happening in the economy. And then again, we look at the importance of the market, how we can use the market to grow the economy. So today, the NGX, as at today, going into the end of the year, the NGX have about 12 subsectors of the market. I mean, that represents the nearly all sector of the market. It has, it then means that whatever it is that that is happening in the economy has a way of reflecting in the capital market as well. This year, the Nigerian capital market has sustained, its momentum. We had a situation where, post-COVID, this is about the 5th year now, and we see what will happen into the next year. But for now, we're seeing the market experiencing a bullish run. Whenever a market does about 20%, it means that the market is on a bullish run. Our market is experiencing that bullish run now because we've done about 20%, and that is still counting. And then again, we also look at what is going to happen in 2025. 2025, we've already seen elections in the US. We have issues in the Middle East, the Ukraine and Russia. These are dynamics that will affect our market one way or the other because we expect, attention to be shifted from the foreign, the developed market, the advanced market, towards the emerging market, which Nigeria, the NGX in this case, is top, is the biggest bride here. We then think that, okay, inflow will be coming from the FPIs. It's not going to be all doom and gloom. In 2025, again, we see that, okay, our expectation is also, we need to look at where is, the NGX, sorry, the market is expected to see, some policies from the federal government, especially as relates to policies relating to the bank, recapitalization. Now, the banking recapitalization in this case is expected to create opportunities. Now, what are the opportunities that we hope to see? On the domestic front here, several factors like inflation pressure will continue, such as the removal of fuel subsidy, the volatile exchange rate, and the disruption in the food supply chain. Now, these policies are, we expect the CBN to maintain some level of stability. Now, the Nigerian economic recovery is expected to also be slower because some of these policies will create mixed reaction. However, we also expect that the potentials are there, especially because we tend to increase our oil production output, the government initiative to mitigate the food shortage as well. And also the fact that the banks are increasing their capitalization, this will give opportunities for investment in the banking sector especially, and also the service sector as is the case may be, because we are expecting the CBN, the federal government through the tax authorities to reduce import duties on some of these companies importing products that are meant for medical and healthcare. This is what we see, and for us to be able to take advantage of this using the ETFs, mixed feelings is what we expect to see, like I said. Now, when we say we are expected to see mixed feelings, there will be moved from one particular sector to another. Now, if I'm investing in the banking sector and I'm exposed there, I will be able to invest as well in the bond, maybe in the service sector. In this case, if I'm using ETF, I'm able to reduce my risk and create some level of diversification, because diversification is what gives us, better return and protect our investment. Thank you.
All right, thank you very much, Mr. Jibril. So, in summary, you expect to see a mixed sentiment in the equity market, and you believe that investors can position using ETFs where they see low prices. All right, thank you. So the next question, I'm just going to be going to Mr. Bimbola Babalola. So I'm just going to be asking you about two questions in one. So the first question has to do with what are the trading dynamics of ETFs? I believe you already touched on it. So maybe you could just breeze through that for the sake of people who are just joining. Then the second question from Abdulaziz Abdusalam is that can ETFs be traded in the already established CSS account or new brokerage? So they are saying that can they buy ETFs once they have an existing CSCS account, or do they need to open a new brokerage account? Over to you, Mr. Bimba.
Yes, thank you very much. I think I will start the answer. I mean, provide my answer, focusing on the second question, then before moving to the first question. So the answer is, once you have an existing CSCS account where you buy your shares, if you want to buy your ETF, just buy into that same account. You don't need to open a separate CSS account for you to trade even most of the products that are listed on the exchange, whether you are buying bonds, whether you are buying ETFs. I think the only instrument that you might need another account will probably be if you're buying derivatives. So to your answer, you don't need another CSCS account for you to buy an ETF. Now, talking about the dynamics of the ETF, like we've mentioned, one of the things is this, that you will know, these things trade like equities, just the same way you buy and sell, you buy and sell. But one unique thing again that you must know is that, there is a basket. There is what we call net asset value, NAV. You must also know the NAV, because this time around, as opposed to you watching or using valuing a security, you are valuing a basket. So your NAV is what tells you whether the price of the ETF is high or it is low. You understand? And that should guide you, because if the price of an ETF is higher than the ETF price, the value of the net asset value of an ETF, if it is higher than the current price of an ETF, it means that that ETF is cheap. You understand? And it means that you can buy more. So one thing you must know about the pricing is that you're also looking at, and you're also, and don't forget that pricing is also about future. But that NAV is what is guiding you to say, in terms of actual value, this is the value. In terms of using asset value, this is the worth of the ETF. So in your pricing, you must take that into consideration. And the truth is that an ETF can actually trade over and above the NAV value. But that NAV, you understand, which the ETF or the asset manager is supposed to be providing for you on a daily basis, is what you use. And we've also discussed the fact that, you trade it the way you trade every other thing. You don't need any additional thing for you to trade that instrument. And that instrument is also available as soon as the market opens at 9:30 a.m. You continue to trade it until 2:30 when the market closes. You understand? You don't need to talk to anybody. Just check the depth of the market, and the market dynamics follows it. And I think one thing I also want to say is this, that option of you doing creation and you being able to redeem. Because if I also, so take for instance now, that is where arbitrage opportunity also comes in. So if the the value of the net asset is higher than the price at which anybody wants to buy the ETF from me, you understand? I can just approach the asset manager and give my ETF to them, and they give me the underlying asset. That is what we call redemption. So all these dynamics and opportunities are there for ETF. And like I said, you will start seeing us introduce more ETFs that comes with other, underlying asset that you might want to have an exposure to. A time might come where the underlying asset is like, if you look at ETF and New Gold is based on gold. And that instrument, I recall, my recollection was that when it was listed in 2012, it was listed less than 1,000 naira. And today, the last time I checked, it was trading around 18,000 naira. And the advantage of that is that, one, you are investing in an instrument that have an exposure to gold. So Naira is depreciating against dollar and gold is increasing against dollar. So you are benefiting in a multiple way. You understand? Such instrument will introduce more into the market. But in terms of dynamics, that is what I've just explained to you. It trades like stocks. You buy it into your existing portfolio. It is determined by forces of demand and supply. For equity-based ETFs, they have limits up of 10%, limit down of 10%. For fixed income and commodity-based ETF, those ones, they don't have any limit up because they are affected by more factors, you understand? And we want you to be able to price it in that way. So I think those are the unique things about ETFs, and like they are well diversified. The cost of you having access to those exposures, they are limited. They are very, very liquid. You understand? So you can do a lot of things with ETFs. Let me stop there. Thank you.
Thank you very much. So, your response just shows that there are a lot of opportunities in exchange traded fund, and really the investors should be playing in that market. So I'm just going to ask all the panelists two final questions for the sake of time, and we'll call it a day. So Ifedayo, Sadiq Olayola is asking that how returns from ETFs paid like dividends in stock. Then I have one final question for you, which is, what's the minimum amount needed to get started with an ETF investment? Is it 1 million naira? What exactly?
Thank you very much, Jason Shiston, for the questions. So in terms of the first question, if returns from ETFs are paid like dividends and stocks, I would say the answer to that is yes. ETFs pay distributions. So as I think we mentioned before, the underlying securities in the ETFs would pay dividends. And as they pay dividends, the ETFs, just accumulate those dividends and pay them on a periodic basis. So typically that's paid by annually. So every half a year. So whether after the first half of the year and then the second half of the year as well. So distributions are paid. And I think I also typed in the Q&A segments that, for example, the Vetiva Griffin 30 ETF has consistently paid distributions since it has been listed about 10 years ago. So the answer to that is a straight yes. ETFs do pay distributions. And, as we've mentioned, ETFs really carry the characteristics of their underlying securities. So if you had a situation where the underlying securities were not paying dividends, of course, the ETF itself would not be able to pay dividends. But because, and the advantage to this, which we've mentioned so much about the diversification benefits of ETFs, is that they hold a basket of securities. So where maybe stock A did not pay dividend, you would likely see that stock B, C, D, E would likely pay dividends. So irrespective, typically when you have those ETFs, you see that they would pay dividends and they would cover their expenses and they would then pay dividends. The second question is the minimum investment. And I think we also mentioned this. There's no specific minimum investment for ETFs. As long as you can buy 1 unit of an exchange traded fund, you have access. So that's part of the accessibility benefits. Even if you don't want to expose your entire portfolio, as long as you have any amounts you want to buy 1 unit, 2 units, and you have ETFs trading at low Nairas, VG30. I don't know what the closing price for VG30 was yesterday. We can check that and mention. But across board, the ETFs, there's no minimum investment per se. As long as you can afford 1 unit of the ETF, like any other stock, you can buy into an ETF. I hope that answers the questions. Thank you very much.
Yes, Ife, but if you can just maybe give us an idea of what the price is like. I'm not saying we're going to get at that price, but yes, so anybody listening then is usually afford.
Okay, so I think we had previously mentioned that there are multiple ETFs. We have VG30, we have Vetiva Banking ETF, we have Vetiva Consumer Goods ETF, we have Vetiva Industrial Goods ETF. So for VG30, for example, I think 36 naira 70 kobo is the practical figure. So 36 naira, you can buy a unit of VG30. You can buy 100,000 units if you like, 1 million units if you like. If you have large volumes, you can always engage your broker, and they would and they can engage with the authorized dealer as well. And the good thing about ETFs as well is that they can be created. So if you want a lot of units, and maybe, you know, the dynamics of the ETFs are exactly like securities. You buy and sell in the market. Like Mr. Babala mentioned, there's also the NAV of the ETF, because they track a basket of securities. Those securities underlying, they have value. So typically you can, on a daily basis, you can get the what would be similar to the fundamental value in quotes of the ETF. And then by the time you go on the market, based on demand and supply, you can put in your bid or your offer for your exchange traded funds. And at that point in time, you can trade. So you can always use the NAV as an anchor, and then based on whatever the market is saying, you put in your bid or offer. And where maybe you have too large units and you are not seeing enough bids in the market, the good part is that the fund managers can always create for you. And where maybe you want to decide to redeem your ETFs, you can also redeem in kind, and you will be credited with the underlying securities for the ETF as well. The ETFs are interesting. You can use them simply, and you can use them in a complicated manner as well. So there are many more funds that we have. I'll drop the link so that you can by yourself go on the Vetiva website, and you see the list of ETFs we have. You see the closing prices, you see the NAVs all by yourself. Thank you.
All right, thank you very much, Ife. Then the final question for Mr. Jibril: who can invest in an exchange traded fund? Then I think the second question would be, if anyone is interested in, investing through Newdevco, how can they?
Okay. Just like the previous speakers have said, anyone if you have an account, if you can open an account, if you can do transaction on equities, you can also do transactions on ETF. It's the same thing. There's no difference. There's not much difference. The only thing is ETFs, they present as, a basket with several other instruments in it. Other than that, anybody, so long as you can trade on equities, so long as you can do bonds, you can also do ETFs. And for the second question, please, can you take that again? What's the second question?
If anyone is interested in buying ETF through.
Yeah, if we are a licensed broker. For most of us here on this call, we know Newdevco to be we've been here for several years, one of the oldest stockbroking firms in Nigeria, the second oldest. We do registered at the stock exchange. We are licensed trading holder, so you can do, if you want to buy or you're interested in investing in any ETFs that is quoted or listed on the stock exchange on the NGX. You can do that through us, just the way you open your account, just the way you place your order, just the way you do any other transaction on ETF, on equities. It's the same thing, same way you can do a transaction through us.
Mr. Jibril, I think the summary is you can reach out to your brokers if you are interested in getting exchange traded funds. So thank you very much to all my panelists. I think we have to end this session now because of time. I think it was really insightful, engaging. We have questions around how people can get access to the slides. I know we're going to be sending the slides after this meeting, so just be on the lookout for the email from us. So I think that sums it up for the panel session. Thank you very much once again. I would now pass the mic back to Ugochi. Ugochi, over to you.
Thank you very much, Jay. Thank you very much to all our panelists. That was such an educating session. So because we are pressed on time, we'll just be moving on to the key next steps, and we would be having the Managing Director of Newdevco facilitating this segment. Over to you, sir. Mr. Abiodun, over to you, sir.
Hello, thank you very much. I also have been following since the beginning, and I am very, very sure that all those who attended this meeting have gained a lot, and that the issue of not knowing much about the process and what is exchange traded fund is no more there because of what we have gained. And I also want to use the opportunity to thank all the panelists, Mr. Babalola, and the Vetiva team, the management, and all the clients and potential clients who have attended this meeting. And I can assure you that Newdevco investment will definitely deploy all our assets to ensure that it is a success. So thank you very much. We are really very grateful for this opportunity, collaborating with Vetiva, with NGX. And if there are other clarifications needed by any of our clients or potential clients, please do not hesitate to get back to us, and we shall continue to engage with you on a regular basis on this issue. Thank you so much.
Thank you very much, sir. Thank you very much. Okay, so our next item, we are winding down to the end of the webinar. So we'll be calling Mr. Shemo Oshomo, the head of brokerage and dealing in Vetiva, to give us the closing remarks for the webinar. Over to you, Mr. Shomo.
All right. Thank you very much, Ugochi. And thank you once again, everyone, for participating in this webinar. I believe we have gained significant understanding in the workings and opportunities that are entrenched in ETFs. Considerable mention is to our speakers and panelists from Vetiva Fund Managers, Newdevco Investment, and the NGX for the insightful and well put together presentation, as well as the conversation around the topic of ETFs and its growing appeal to a wide range of investor base. I'm convinced we have all received value and gained more knowledge from this webinar. And just to reiterate, ETFs are exchange traded. That means they are traded on the exchange and easily tradable, which eliminates the challenge with liquidity of this asset class, while also providing a low-cost route to investing in the markets. I believe the takeaways from this session, such as why the ETFs at this time and how to go about investing, will surely enhance our decision-making in ETFs. Please reach out to your stockbrokers and start your ETF investment journey today. So thank you once again, and do enjoy the rest of your day.
Okay. Thank you very much, sir. With that, we have come to the end of this webinar hosted by Vetiva in collaboration with Newdevco Investments Securities Limited and the NGX. We trust that you have had a very enlightening session and we have lots of information that would help in our investment decisions going forward. So on this note, I thank everybody for participating and joining this webinar. Do have a great day. Thank you very much.
Thank you very much, Ugochi. Thank you, everyone.
Thank you, everyone.